Turn to Morgan Stanley's Erik Woodring. He's here, as I showed you before, with Apple's earnings top of mind for investors this week. It's good to see you. Thanks for being patient as we got through some breaking news and kicked around this hot market on this Monday. But you seem to underscore very well the sentiment around the name. You reiterate your outperform, but you also admit that you're tactically cautious. How do you separate both?
So, again, if we take a kind of page from the guest prior, Apple is still a high-quality company, a name that I'd want to bet on long-term. If I have duration on my side, I say at $169, I feel comfortable being overweight. But when we think about earnings on Thursday and the potential for Apple to guide the December quarter slightly below where consensus numbers are, again, is it thesis changing? No, but tactically, given what we've talked about in terms of the setup for tech this earnings cycle, I think it makes me a little bit more cautious.
Well, let me go a little deeper on that then. Why wouldn't it be thesis changing? If I say, okay, new phone, we've had this upgrade cycle prolonged because of COVID. Now they come out with a hot new phone, the latest and the greatest, going into the most important quarter of the year.
Yeah.
When you have a new phone, and if it doesn't live up to expectations, why doesn't that change the thesis where the iPhone is still everything?
So I think this actually is very reminiscent of the iPhone 13 cycle for us. If you go back 2 years, what happened in the iPhone 13 was there were production shortages, or I should say component shortages for the Pro and the Pro Max. So we came into September quarter earnings, Apple's December quarter guidance disappointed. Fast forward 3 months, what we learned is that the component shortages that were impacting the December quarter actually loosened a bit. Apple was able to post upside to the December quarter and guide to a stronger than seasonal March quarter. This feels very similar. Again, the shortfall in the December quarter this year is not a product of weaker demand. We think it's a result of supply component constraints, mainly with the iPhone 15 Pro Max, where there's just not enough devices that can be built in the December quarter. That means some of that demand gets pushed forward. If that is indeed the same setup as the iPhone 13 cycle, what you get is a below seasonal December quarter, better than seasonal March quarter, which makes a tough setup right now. But ultimately, in the big picture, it doesn't actually change our view. It is more supply-driven than demand-driven.
I'm just wondering, when it comes to demand, how you're thinking about China. You know, because what are we talking, 20% of revenues out of China?
Yeah.
Now we have these headlines, reports, however you want to characterize them, suggesting that Huawei is taking share in China from Apple, which would be a demand issue, not necessarily a supply issue.
No, and I think China, the commentary is fair. We have China units down this year. Again, Apple was the biggest beneficiary of Huawei going away. It does make sense to think of Apple then being in the crosshairs of potentially losing share. So we do think iPhone shipments are down in China right now this cycle. Again, is China broken as an end market for Apple? No, but there's more competition, more risk to share gains this year. Again, directionally, I think it's down. The offset to that would be actually the U.S. and EMEA and emerging markets ex-China actually look a little bit better than we expected. So the world is a big place. China matters a lot. The rest of the world theoretically does matter more than just China.
What about the stock itself? It's 170, it's almost 170 even. People I talked to recently on this program and the other one are like, chart doesn't look good.
Yeah.
The chart this stock hasn't traded well.
Yeah.
So it's almost a rarity when you come into a report where Apple shares haven't traded well. Usually runs up into the number, and then maybe the risk is it sells off on the other side. It's sell the news.
Yeah.
Not this time.
No, it's been an interesting year. Again, we saw almost 200, high of almost 200 earlier this summer. Let's call it. Stock's now down to 170. I think last time I was on with you, I talked about 160 being kind of that level where I would be more comfortable coming on here and saying, Scott, let's get more aggressive. What I want to do is kind of get September quarter earnings out of the way. Again, I think the September quarter is okay. It's the December quarter guide that I'm concerned about. But get earnings out of the way, see where the stock settles, and go from there. But I do agree that, call it over the last 4 months, Apple actually hasn't traded as prolifically as it had, obviously, in the first half of the month. Still, year to date, it's my second best performer after Dell.
But that guide is going to have the utmost focus, especially after last week's mega cap reports and some of the guides were questioned. Is that risk to get you to the 160, perhaps?
Yes, exactly.
$10 decline?
That's what I'm looking for. Do I think that we're going to see a $10 decline in the stock immediately after the earnings report? No, but what it does is it shapes up for the potential negative catalyst event as we move further through the year. Remember, the DOJ Google trial is expected to end, or at least we're expected to get headlines in the middle of December. if that's the case, there is a bit of a negative catalyst calendar here between earnings and mid-December. That makes me a little bit, again, cautious into the print. But when I take a step back, again, the Google DOJ trial matters, but earnings to me is a short blip in this scheme of things, and again, more supply-driven than demand-driven.
Apple's been sort of left out of the AI narrative, right? It's been about everybody else but it.
Yeah.
Does that change anytime soon? And if so, how?
Well, I don't think it changes soon, but I do think it changes. Again, the iPhone is kind of the ultimate device that we keep on our person. It has all of our details, whether that's financial detail, location detail. Again, safe, secure, that is Apple's way. But what that ultimately does is it gives Apple a ton of data to use. And to me, Siri as the personal assistant, the ultimate personal assistant, makes a ton of sense. Now, there's been reports that Apple's investing in AI. We believe behind the scenes they are clearly investing in AI. We know they're using some of that technology, for example, for smart dictation, better autocorrect, but that's not the end-all, be-all. To me, the end-all, be-all is Siri as the ultimate smart assistant, and I think we are taking baby steps to get there. Again, Apple also cares about regulation. You know, Biden signed in a new bill today talking about AI regulation. I think Apple wants to understand what regulation falls before they make a big bet. Ultimately, that can impact the monetization of that technology.